Welcome back to another video, friends. Today I want to talk to you about interest rates. Now, like it or not, but the interest rates are coming down, which is great for some, those who have a mortgage or a loan to pay, because interests are getting cheaper, so what you pay back is also less money. On the other hand, I know a lot of you, myself included, also have some cash sitting on the sidelines, accumulating some juicy interest rates, which in the past has been really attractive at 4, even 5% interest per year. But unfortunately, that's about to end. Interest rates are coming down, so we're going to have a look where the interest rates are standing around the world. Some of the tools that I'm using myself to still get the highest amount of possible interest out there, and of course share with you a couple of ideas what you can do if you don't get as much money on the bank anymore as you used to for your money. What other options we have to really maximize the money for you. Without further ado, let's get started. Now, starting off with the ECB, the European Central Bank, they have now recently cut the interest rates for the second time this year. And you can see right now we're down to 3.5% interest rate, which is, obviously still very high if we compare it to previous years. But yeah, honestly, we have been extremely high for a long period. You can see over here, if I pull up the table from the ECB themselves, we were at 4% interest, which was really one of the highest rates I remember for a long time at least. And previously, when we go back a couple of years, we were actually look in 2019 at negative interest rate, which is really unusual and obviously does not make sense. And I don't think we're going to see that anytime soon again, at least. But hopefully, even when we go back some of the earlier years, to around 1.5 to 2.5, maybe 3% interest rate. So I think more cuts are about to be coming. And yeah, that just means that obviously the money you get on your savings will also be lowered. And I saw this already. A couple of brokers that I use for keeping my money over there for high interest rate, such as Trading 212, also just informed me due to the European Central Bank's decision of cutting their rates, they will now be cutting their interest from 4.2%, which was actually really high, to still 4%. Now I'll come back to Trading 212 in a second. But yeah, obviously more and more brokers, other banks are doing the same because obviously they follow the lead of the ECB or whichever country they're based in because they cannot make more money, right? Ultimately, it all depends on the central bank's interest policy. But it's not just the Europeans, it's also other banks, central banks around the world, such as Bank of England. They have recently lowered it the first time to 5%, so still higher than the ECB rate. But yeah, you can see also the rate cut coming in. And obviously, I think it will continue. You see, not so long ago, we were at almost 0% interest environment. So personally, I don't think we're going to go back there anytime soon, but we'll definitely come down in the coming months. Now, most notably, of course, is the US. Whatever they dictate, we will see, influences around the world based on their decision. So far, they haven't really made any cuts to the interest rate for a long time. People are really hoping on that. And it looks like this week, the Fed come out with the announcement of most likely a 0.25% cut to the interest rate, which would really give some strong signals to the markets that we are, as somebody from JP Morgan said, entering a cutting phase where once they start, I think it will continue going down. Again, I don't think we're going to go to 1% or 2% interest rate, but we'll definitely start coming down from the high rates we have seen in the past. And yes, this week we also have Brazil and UK announcing, as well as South Africa, Norway and Japan. So really, it's the time now that countries announce what they're going to be doing with their monetary policy going forward, and all eyes on interest rates, because that will really have a major impact, much more than people expect that will have. Because interest rates drive entire economies, right? If you have 0% interest rates, well, basically you have free money. Companies can borrow money and use it to reinvest into the company, grow their business, their operations. So it's really growing overall the businesses itself. The same way more people investing their money in the stock market because they don't get money on their saving accounts, right? So you don't want to just leave it there and lose money to inflation. So you want to put your money to work. And on the contrary, if you have high interest rates, well, then people spend less money because they get safe and guaranteed interest on their money sitting in their bank account, and businesses can't afford to borrow money because it's very expensive. Also, private investors like you and I, right, taking a mortgage gets increasingly expensive. We've seen this recently. When you took a mortgage pre-2020, it was significantly cheaper. Now mortgage rates can be 6, 7, even 8%, which is extremely expensive. So you can really see how the interest rate changes have a real domino effect on the entire economy at large. Now, of course, there are options out there where you can lock up your money for a longer period. This is a platform called Weltsparen by Raisin. So they are available in many different countries, mostly in Europe, I believe. Here you find all the highest interest rate paying banks around Europe, mostly in the UK. And you can see right now you can get 3.6% per annum, but you have to lock it up for at least 1 year. Now, I don't know about you, but I like staying flexible. I don't want to commit my money because honestly, I don't know what's going to happen. Even 3 months from today, 6 months, let alone 12 months, right? So in that way, I don't like it. And actually for 3.6%, it's not that attractive. And I'll show you in a second the apps I'm using where you can get actually still better conditions without any lockup period, because I don't want to lock up my money. Even when I invest into ETFs or Bitcoin, I can sell it anytime I wish and have the money for myself, right? And I really don't want to be locked up into anything. So for me, I don't see this as the best option. Of course, having said that, what you buy yourself here is the safety that you have that interest rate locked in for 1 year. Because what can also happen, that the ECB decides to continue, every other month to lower the interest rate. And maybe in a few months, we're down to, 2.75%. So in that way, you're better off. Personally, I think it's highly unlikely that it will happen so fast, so low. And on the other hand, there's still many better options out there that pay higher interest and without any lockup period. And there are a couple of options that I personally use and can really recommend to you. The first one being Trading 212, which is probably available in most countries. Most likely you will be able to open a Trading 212 account. And if you haven't yet, then use my link down in the description below and you get a free share valued up to 100 euros. Right, so once you're up and running and set up your account, you see here my portfolio, my cash holdings. Very easy, very user-friendly app. I really love it. And even if you don't want to buy any stocks or ETFs, you don't have to. You can just make a bank transfer into Trading 212 and leave the money sitting over here in your account, starting to accumulate some sweet interest. And you can see, despite the lowering of the interest rate, right now it's still 4.2%. So as I just shown you before, it will be lowered to 4%, but 4% is still so much more attractive than all the other rates I've shown you. These are the best rates in Europe right now with the 1 year lockup period. Here is no lockup period, meaning I can withdraw it anytime I wish and have the money back in my bank, which is really awesome. And I just like that flexibility. And even better, in case you have different currency or you don't mind having money kept in another currency, then you can even convert it very cheaply inside Trading 212 at 0.15%. So very attractive rates. And for example, convert it to dollars. And in this case, you can earn up to 5.1%. Now, of course, if the Fed comes out this week announcing that they will lower the interest rates as well, then I'm sure those rates will be lowered as well. But I'm sure we're still going to be seeing something like 4.75%. So still much more attractive than the money you'll be getting on your euros. Or of course on the pounds, which is also very attractive at 5.05. Even if they continue lowering this as well, I think it's still a great place to keep some of your money, at least part of your money, right? You may not want to commit to put all of it over here, but at least some of it, I really feel comfortable with them and it might be a great option for you as well. Another great option is Lightyear, which is another great broker that I use myself. They offer commission-free ETF trading. They also have great stocks, so you can really buy anything you want. But once again, you don't have to use that for that. You can also just park your excess money or emergency fund over here, like I do as well. You can see you can either keep it in a cash account, where you can currently get 3% on your euros, 4.5% on your dollars, and 4.25% on your pounds. So slightly less, but still a great option that I really recommend, especially if you have a larger amount. You might want to diversify it and not keep everything in one single app or broker. So I think it's a great option. You can also keep it in your savings account. So here I'm currently getting 3.7%, but that's fluctuating. It's a great way to really maximize your money. And once again, that is better than what I've just shown you before. Some banks are offering with the lockup period. Here you can withdraw it anytime you wish. So really love that. Another very popular app that people use is Trade Republic. I use it myself. You can see right now I get 3.75%. It's a German licensed bank. Your money is protected up to 100,000 euros and interest paid is up to 50,000 euros. So really, if you have a large amount of money, probably that might be a great option for you as well to keep your money over here. And lastly, as you might know, I'm a big Revolut user myself. I don't use it for stock trading or investments, but for my daily banking and of course for that sweet interest that I can get on my euros. You can see right now I get 3.67% and on my dollars 5.28. So that's probably the highest interest rates on the dollars I've been seeing out there. So it's really attractive. I should be probably keeping more, but I still keep majority of it in Trading 212. And yeah, it's up to you. If you use Revolut a lot, I think it can be a great option. Now I'm on the Revolut Ultra plan. So I think the higher your plan, the higher the interest. But if you use Revolut a lot and you are on one of the higher plans, then I think it could be a great option for you. Now, in case you are living in the UAE, then I can also recommend you Wio Bank, which is an amazing bank I use myself. And you can see right now I'm getting 5% on my savings over there, which I can also withdraw anytime I wish. Really awesome. They will be lowering it to 4.25%. If you lock it up for 1 month, you can still get your 5%. So really attractive. So if you live in the UAE, I think it's a real good option. These are some amazing options that you can really utilize to maximize your money and make it work for you to still get some interest while it lasts, because it may not last forever, right? If the central banks around the world will continue to lower the rates to have basically cheaper money available to stimulate the economy, what have you, then those rates will continue to go down. And obviously, also those apps will eventually lower the rates. So it might become less and less attractive. So what are some of the other options that you can take advantage of in a low interest rate environment. Now, one thing that comes to mind, a lot of people ask me about is P2P lending, where you basically become almost like the bank, giving credit to other people. And there's some great options out there where you can basically give your money to them. It's a platform that manages that money and gives it to those who need. And in return, you get a high interest rate. You can see here, some companies paying, 11% interest rate, 12% interest rate, 13 even. So really quite high interest rates when you think about it. For example, Bondora was one of the platforms that I used myself, 6.75% interest rate. So it sounds attractive, but why I personally don't do that anymore, because it's also not 100% guaranteed. Those rates are fluctuating, they're not fixed, they're not guaranteed. And often those companies don't actually pay back their loan, or it's delayed. So I heard from a lot of people that they've been waiting to get their initial capital back, and even the interest rate may not even come on time, or you still have to commit and lock up your money for at least 6 months or 12 months in case of a real estate P2P lending platforms. So I think for some people who really don't need the money available right now and have time, then it could be a potential way. I'm not saying it's not a great option. I've done it myself. It did work. I get my money. But right now, personally, I think there are better ways to invest your money rather than locking it up over here, because once again, you will be committed to it. You'll not be able to withdraw it anytime you wish. Now, another very popular option is for people to buy bonds. Now, bonds are basically, debts that you buy from either companies or the government itself. They issue debt basically, and you buy the debt from them and they pay you interest in return. And some of the brokers are offering those things. For example, Trading 212, you can buy bonds over here. You can see even from countries. You see, for example, Romanian bond you could buy at 5.28% annual return, and it has a duration of 9.4 years. So rather long, and it describes very clearly, you will get 73% of the return yearly and the remaining 27% at the end of the period, which means after almost 10 years. So for me, this is a way too long time period, and not something that I'll be personally get excited about. Now, obviously, there's always a risk of default, but in the case of a government country like Romania, I suppose it is rather safe. But once again, for me, it's just the timeline too long, and I'm not the biggest fan of that. But if you want, you can obviously log in a good interest rate for a longer period. But at the same time, you could probably achieve a similar way by investing into dividend-paying companies. There's some great dividend-paying companies, for example, Realty Income. You can see they're paying a dividend of 5%, and they have done so and even grown their dividends over the last 26 years. So really reliable. They pay out the dividend every single month. It's a company I used to own myself. So in that way, I think that's much more attractive, because here you get a dividend plus your capital over time also grows. With bonds, it actually doesn't grow. You get back the same money that you invested. You only make the interest rate on top of it. So I think in that way, obviously there's a risk of it going up and down, but you still get a dividend, which is fairly safe given the history of the company. And yet another investment opportunity will be real estate, because I really believe that the financing, the cost for a mortgage will become much more affordable in the future as the rates come down. So I think if you have been interested in buying an apartment, a house, what have you, I think it might be more and more relevant and more attractive again, because in the past the mortgage rates have been so high that it was just impossible for people to pay the mortgage, right? Even what you would make from rent, let's say, if you rented it out as an investment vehicle, would not even cover in many cases the interest rate payment for the bank. So I think now that the rates come down, that becomes ever more attractive. So if you've been contemplating about this, I think it could be a great option, because of course, once the rates really come down, then more and more people will be interested in buying, and that in return will drive up the prices for the property. So I think it's a good time to get in early, capitalize on still low real estate prices, because I don't think they're going to go lower. Once the interest rates coming down, the prices for real estate will also go up. So it's always correlated. So that might be a great opportunity as well. And lastly, of course, good old investing into either stocks or ETFs, which I do myself, because I really believe once we see interest rates coming down, people have less incentive to keep their money at the bank, right? Let's imagine an extreme example. They continue cutting, and eventually you would get 0% on your money kept at the bank. Well, you have no incentive to keep it there, because you lose money to inflation. So instead, people use that money and put it into the stock market to put it to work, right? So I really think, once rates come down, more people put money into the stock market. Once again, that will drive up prices, because there's more demand for those shares, for those ETFs, and that will bring up the prices and obviously your return as an investor. So personally, what I will be doing is keeping the money that I have in my emergency fund, which is around 6 months of monthly living expenses, kept in various accounts that I showed you before. In case of emergency or what have you, I can withdraw that money anytime and use it for whatever I have to. And the rest of it, I will continue investing into Bitcoin, as well as my S&P 500 ETF. Right now, I'm not planning to add any real estate. We just bought a new property in Vilnius, Lithuania, plus my 2 apartments here in Dubai. So in that way, I'm okay. But obviously, I will continue to save that in the future. Hopefully, I'll be able to add more properties there as well. If you have any questions about anything I mentioned in this video, let me know down in the comments below. I'll get back to every single one of you. Next up, check this video here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.